Welcome. It's time for my monthly full portfolio update. I'm going to show you today the value of my portfolio and as it relates to my long-term investment challenge. I'm going to show you today the holdings, each of the holdings, performance of those holdings, full transparency, so you can see what I'm up to. On the basis of seeing what I'm up to, I'll also show you the buys and sells I've had over the last month. So let's dive straight into the screen and I'll take you through the latest view of my portfolio. Okay, let's get started. So the previous update at the end of October, start of November, we had a value of just over 41k, and the portfolio has now evolved to just over 42k. So it's a decent increase over the month of November. In terms of the position, stretch targets for the 10% return per year, I needed to be at 38.5 at the end of the year. Now just a month left and I'm at 42, so almost 4,000 ahead of that. So there's a really good chance that I finish ahead of the stretch target, which is to hit the £1 million by 2050. So since last month, the evolution of the portfolio is the usual minimum £300 deposit has gone in, and there's been a plus £850 or 2%-ish increase in the value based on value of the underlying holdings and dividends. Now the required run rate, sort of the slow version to the million by 2060, I need to be getting 6.41%. That's a relatively modest aim. 2050 is an interesting one. So if I hit the minimum £300 a month, I now need to get 9.48% a year for the next 27 years. So to do that consistently over that period of time, that's still a decent ask. Okay, in terms of the dividends, City London Investment Group, a lovely £22 in November. That is 5% against my original cost of the investment. Good dividend yield. Also a decent wedge in there for Unum Group, and Unum's one of my favourite holdings and top performers so far. And you see on screen there's a few others that have come in as well. An average month in terms of the value, but yeah, happy with the dividends that have come in for that section of my portfolio. In terms of sales, Alpha Metallurgical Resources is the only sale activity. I've sold a couple of shares in that. It's a cyclical in that part of my portfolio, so they do need to be sold. And we're getting towards the top of that cycle, I feel, so I'm just sort of chipping away, a bit of a hedging strategy almost at selling that one. There is a special dividend coming actually, so I'm just holding on a bit longer to the main chunk, but that's locked in some of the profit that I've hit on this, my most profitable holding. On the buy side, just the two buys. My usual £100 a month going into Fundsmith, and that will continue. And the only new position is Skyworks Solutions. Depending on when you see this video, I'm either about to release a video on Skyworks or I've just released one, so please check that out if you want to know more. Company that's quite exciting, and it is better than some of my existing holdings. As a general point, I want to keep these buys and sells low in terms of number of transactions like I have this month. Be nice and patient, keep those transaction costs down. As always, I'll be transparent and let you know what I'm up to. So the portfolio is split as follows. No particular major changes within month to the previous month, but it's worth noting that the cash pile is at 17% of the portfolio, so it's quite a big cash pile. The other thing to flag is the quality stocks, which is just over 10,000. A quarter of the portfolio, I do want that to be in the 40 to 50% range. So a lot of the unclassified and cash values that you see there, most of that will end up going into that quality section as I move through time. Now, a new check I've introduced this month is Simply Wall Street, and it actually gives me the average return on capital employed across the individual stock holdings in my portfolio. And that's quite a nice little indicator. So I'm going to show this every month. Just over 20%, which I think is a good value for summary, just to see the quality of the portfolio. Pretty happy with 20%. So into the performance, perhaps a bit you've been waiting for, the detailed performance of every holding. Cyclical section first. You can see AMR is the vast majority of this. Ramaco second, both coal companies. Both dropped a little bit in month in terms of their market price, but also with the exchange rate change. But overall, sitting on very, very nice returns on those two companies. We've had some big movers there within months with Ultrasource, but also going the other way is my very small Ethereum holding. Overall, the cyclicals sector or segment has been very profitable for me, and it's just about now being very careful about when I sell, particularly those top 2 or 3 holdings, because they'll probably all need to be sold within the next 12 months. On to the dividend stocks, which is a good number of holdings in the portfolio. If you have a look at the total return here, apart from Sturm Ruger & Co, which is -4%, every other holding here is positive, and some of them well over 100%. It was a really great part of my portfolio, and I'm very happy with how I select these companies. Now, despite the big, impressive sort of percentages there, you can see that Udemy is by far and away the favourite company. It's over double the second biggest, Aviva, which is also a company I like. And that's gone quite well, because those 2 biggest companies have returned some very nice figures there. But within a month, we've had some quite big changes. So Unum's down 30 percentage points. That's partly due to exchange rate fluctuations, and also prices gone from about 46 to 42 in the market. Not a massive issue, but overall it's dropped me down 30%. Conversely, Investec's gone up in November 55 points to plus 274%. It's been a great investment. Other than that, there's not really too much to write home about here. They're all sort of ticking away, dropping those dividends in, and this section of my portfolio is performing very well. Now, the quality stocks section. A few changes here in terms of Skyworks at the bottom there coming in new, and I intend to grow that position. Anthem is probably the biggest change in month. That's down 15 percentage points. That's dropped out of the 100% club, down to 86. Conversely, Unilever just below it there's gone up 8, and that's now at 100% return. And that joins Bank OZK in the 100% return club. Again, this portfolio is looking pretty good. There's a few that are down slightly. Micron 12%, Adobe 10%, Somero 12%, but not very much. The only one that's down big is Intel, down 36%. I think that's got a low chance of failure, and I do think that's also in part because my initial entry position was too high. So those are the quality stocks. Moving on to the managed, which is going to be up to a quarter of my portfolio to protect me against my own failure and ignorance. Actually, across the board in terms of change in month, the UK market's performed very well. So you can see FTSE 100 there's gone up 9 points. The Linsale Trains up 16, as is the smaller Co's fund. FTSE 250 is up 10. So that's kind of boosted this section quite a lot. Yeah, again, looking across the board, that every single one of these, apart from Fundsmith, which has come back to 0, is actually positive. So it's just in the background, perhaps not super quick, but it's ticking the portfolio along, helping it grow and de-risking a little bit, which is the aim of this this part of the portfolio, because I could muck up with my stock picks, so I've got this to fall back on if I do. Now I've got 2 which I want to sell, but Voyager I can't because that's gone bankrupt, so showing that for transparency, that's my first one that's gone bankrupt. And GAN, it's just absolutely shocking. I'm in 2 minds here. Do I sell it and at least get 150 quid back, or actually, with the betting and the World Cup, or is it one to carry on holding and it might recover? I'm not sure. I'd be interested to hear your thoughts below if you hold GAN, what you think about it. I've got some unclassifieds here, and I think most of these are actually good companies, but don't quite hit my criteria for quality, so I'm not in any rush to sell them. But in due course, they will be sold from the portfolio when I find something better to put the cash into. So if I sold all of these now, my portfolio would be well over, I think, over a quarter cash, and then that's not making any returns in the market. Alibaba in month has had a good month. I think it's hit getting towards 90 in terms of share price. That's up 14 points. It's a good month there. I'm pretty convinced on that one that I will make my money back and a little bit more. So that's the update. So we've gone through the value, the run rates, you've seen the dividends that come in, what I've been up to, how I've structured, and then every single one of the holdings in performance. Check out the link at the end to look at my playlist for stock reviews in case you're looking for some investment ideas. Otherwise, thanks for watching and have a great day.